Thank you and welcome to the Cose WebEd series. Today's topic is business insurance, an insider's look, and will be presented by Robert Strachan of Strachan Novak Insurance and Tessa Forby of Grange Insurance. Before we get started, I would like to take a moment to go over a few housekeeping rules. My name is Marissa, and I will be the webinar organizer for today. We want to make sure that today's presentation is extremely valuable for you, so we ask that you submit all questions by clicking on the question button in the control panel and typing your question. Your questions will only be visible to me, and I will collect all questions submitted, and we will do the question and answer with Rob and Tessa at the end of their presentation. Now for the main event, I would like to introduce Robert Strachan and Tessa Forby. Robert is a 2006 graduate from The Ohio State University. He started his insurance career with a leading commercial insurance company in Columbus, Ohio. It didn't take long for Robert to see a serious need of expertise in the insurance world to the end user. In 2011, he decided to leave the company and pursue a career in helping the companies properly protect their most valuable assets. He is passionate about education and furthering his professional career. In 2014, he completed the Certified Insurance Counselor CIC designation, which puts him in an elite circle of professionals. Tessa started her career with Westfield Insurance as an agribusiness underwriter. In an effort to be closer to her family, she took a position with Nationwide Insurance as a commercial underwriter, working with their independent agents on the Allied Project platform. After working in underwriting for almost 8 years, Tessa took a position as a product specialist, working exclusively on product enhancements for general liability. In an effort to pursue her career aspirations of leadership, Tessa joined Grange as an underwriting manager in 2013. She has been handling the state of Ohio for small and middle commercial insurance since joining Grange. Without further ado, I will now hand it over to Rob and Tessa.
Thank you, Marissa. I really appreciate that. And everybody, thank you for listening in on our presentation this morning. I know that insurance is not the sexiest thing out there to talk about. In preparing for this, I watched a couple other webinars, and a couple of them were CPAs or lawyers. So I understand insurance is just as dry as that stuff, so we're going to try to keep this thing moving. But my goal is for everyone to take 2 or 3 nuggets of information away from this conversation and put it into your business. Whether it's a hard thing that you make sure that it's in your insurance policy, or to have a conversation with a lawyer or your current insurance broker. But a little bit about myself outside of what Marissa said. I'm born and raised in Cleveland, Ohio. Went to Ohio State University, and live in town here with my wife and 2 sons. Again, I enjoy family, fishing, golf, and meeting new people. So Tessa, I don't know if you want to talk a little bit about your background.
Sure. So like I said, I started out at Westfield Insurance. How I got into that role is I grew up on a dairy farm in Central Ohio and went to the Ohio State University with a major in agribusiness education and a minor in production agriculture. So through that, I met some folks from Westfield Insurance, and they came down and had some interviewing and joined agribusiness underwriting team at Westfield, not knowing what insurance was about. And I think it's one of those careers that when you get into it, you just kind of can't get out, you're stuck. So hence I've been there for the last 14 years in insurance. I've transitioned from an agribusiness underwriter into commercial lines and handle small and middle market. So I've been at Grange, like I said, for the last 5 years, really enjoy it, what we're doing, making a lot of progress, and really trying to penetrate the state and write more business, and really, partner with our independent agents and, look to ensure profitable businesses.
Great. And Steve Millar, the CEO of Cose, was going to be the moderator, but at this point he's having some technical difficulties, so we're going to just go through the presentation just with Tess and I. So Steve wanted to know, give us a state of the industry, of the insurance market. And historically, the insurance industry goes in ebbs and flows, meaning a soft and a hard market. We've been in a soft market, meaning that premiums have been low over the last 5 to 7 years. We are seeing hardening or stiffening of rates, specifically on the auto side, and then now we're seeing rate increases on the property side. Ohio is one of the cheapest states to do insurance or to buy insurance. Most people in Ohio don't want to hear that because they still think the premiums are high, but historically across all the states, Ohio is still a pretty good state to be living in, and when it turns into insurance, unfortunately, we still share in all the losses with all the other states. So we've had a lot of tornadoes, hurricanes, natural disasters in terms of fires. That is going to continue to make the rates increase. But again, it's still a buyer's market. The industry, insurance companies are very aggressive at this time in terms of acquisition of new business. A couple things that are changing the market landscape. As we all know, the autonomous vehicles. We've got Elon Musk and a couple other revolutionists that are coming out with amazing technology. We've got cars driving from Boston to San Diego with no drivers. We've got Uber is out there test driving the autonomous vehicles, no drivers in Arizona. We saw that in the news the other day. There was a fatality, but you're going to have that. But those are things that are going to drastically change not just our industry, but the whole landscape of the business market. Amazon, Google, they're obviously always going to be trying to tap into insurance. You know, they're doing the health insurance right now. Amazon just came out to talk about how they're going to be rolling out a health insurance plan for Amazon employees, and then probably rolling that out to others. And lastly, there's going to be consolidation. There's a ton of acquisitions going on in the broker space of insurance. Again, that's no surprise. You got acquisitions and mergers in any industry at this point. So getting into some high-level insurance stuff and takeaways that you can take back to your industry or into your company. The biggest thing, the golden rule, if you have a true advisor and you're involved in the process, and ultimately if you focus on the cost of risk and not the cost of insurance, you'll be okay. Meaning, don't look at your insurance as an expense. It's truly an asset. We always say, when do you want to know your insurance is properly written, before or after a loss? We always say that you have a CPA, you have a lawyer, and you have a financial advisor, but you don't really have a true advisor for the insurance. Without proper planning, you're going to have a big hole in your advisory crew, advising you and your business going forward. So Steve wanted to know what is the agent's role? What are we doing as a broker in Northern Ohio to help our insureds? And the first question he wanted to know is, who are we responsible to? Are we responsible to the buyer, meaning you, or are we responsible to the insurance company, meaning somebody like Tessa, Grange Insurance, Cincinnati Insurance? Ultimately, we are stuck between the two. We're responsible for both parties. And ultimately, what we're talking about, insurance is contract law. Contract law meaning, in the event of a claim, the insurance company states that if the policy is written correctly, they're going to pay based upon what the contract states. The last thing we want to do is write an insurance policy incorrectly. You have a claim, and the insurance company is going to say, we're denying the claim because of misrepresentation on the application, or we didn't know exactly what you were doing. So we're stuck in between you as the end user or the buyer and the insurance company. We have to be a syndicate or a bridge between the two. We also analyze the risk. We obtain information. We develop a risk management program tailored to specific clients' needs, and then we shop out to each insurance company. So that's our roles as a buyer. What are your roles? What's your role in the buying process? Well, you've got two separate ways of doing business. You can go through a direct writer or an online experience, meaning an Allstate, State Farm, Nationwide Farmers, or you can go through an independent broker or agent like ourselves. Most independent brokers in the area have relationships with about 5 to 15 different insurance companies, and their job is to shop the market for you. They need to understand the risk, and they also have to understand what insurance company is going to do best for your business. if possible, I would encourage you to have a face-to-face sit-down with your broker. Understand what exactly is their niche or their core capabilities as an agent. Ask them those difficult questions. Ask them hypothetical questions. Really get into the what ifs and really understand that if your broker knows what they're talking about. I encourage you to start 3 months or 90 days prior to your renewal, your expiration of your policy, and ask for the broker or the agent to give you the quotes 2 weeks prior to your renewal so you can really take a look and review. Lastly, of course, any insurance broker that they give you a proposal, take a look at the AM Best rating of that insurance company. The AM Best rating is essentially a financial rating system showing the financial strength of that specific insurance company. I would suggest that you don't want to deal with insurance with depending on the risk. You want to have something that a carrier is going to have an A- or better for your AM Best rating. Tessa?
Thanks, Rob. So a lot of people ask us, what's the process of underwriting a business for insurance? So what do I look at when a risk comes to me? So the first thing that we're going to look at is the agent sends us the applications, and Rob already told you should be as honest as possible when you're sending the applications in. The other thing that we ask for a lot of times is a supplemental application. So for instance, we might ask for a restaurant supplemental or maybe something like a contractor supplemental, things that are more risk specific. So, you know, certain classes of business, we'd want to know a little bit more about it. The other thing that we look at is risk control. So what risk control does is it's essentially our own engineers that are employed by the carrier. Sometimes we'll hire a third party, but they go to the customer or insured's premises, or they might even do like a job site survey where they go out there and they just look for ways to improve safety, potentially mitigate future losses. Maybe it's fire prevention, and they make a recommendation, hey, you shouldn't have those extension cords where they are. Or they might even look for things like prevention of slip and falls. The other thing is they would look at if you had a fleet of vehicles and say, hey, do you have a vehicle maintenance program, or do you collect driver files? And just things to help the insured to mitigate future losses and really protect that insured and also protect the carrier that writes the business. Now, usually an underwriter would determine whether they wanted to have that risk control go out prior to insuring the business, or sometimes they'll go ahead and say, hey, we'll go ahead and offer the policy. If we write the business, then we'll go ahead and send somebody out after the fact. And so that's a really good source of information for the company. The other thing that we'll do is we'll use third-party vendors, and those vendors include Cose, which is it's used as it's a vendor that essentially helps us to classify the business. So it'll tell us based on what the insured's operations are, this is the class of business that we should be, we should call it this, and it would get the appropriate rate. It's important because a lot of times, like a contractor, they would go and they would have an audit after the fact. And so it's important for us to class it correctly up front so that the insured doesn't have potentially an increased premium or a return premium at the end of the policy term. So Cose is called Premium Audit Advisory Service, and most carriers use that service. We also use ISO. ISO is Insurance Service Officers, and that is really, they support carriers by providing forms, actuarial analysis, but they also do surveys of buildings and develop a report that actually provides rates for that specific building. So oftentimes people that have a building that's sprinklered, ISO will come out and they'll do a survey of the building, and they'll ask questions, and they might even ask to see the sprinkler riser room and just different areas around the premise to understand more about that particular building and the operations conducted inside. And then hopefully everybody knows what an ODR is, and that helps us to determine the eligibility of the drivers, review violations, and the types of violations that the employees or the insured might have. All of those vendors are pretty common, amongst the carriers. So we essentially use those to provide consistency in the market, and it helps all of us to be a little bit more consistent about our underwriting practices. The other thing that we look at is the prior losses. So most people know that, your past can be an indication of future claims. Have they put the controls in place to keep, a particular loss from happening again? It can be a factor also in determining the price or acceptance of the risk. Another thing that we look at is Google. So we'll usually just go out and Google the risk to see, the street map view to see what the risk looks like. Are they maintaining the property? We'll look at the website, to make sure that, if the person told us, hey, I'm a carpenter, and I go out there and I look and they actually are, snow plowing, or they're a roofing contractor, I want to make sure that that website matches what the insured told the agent and what they put on the application. The other thing that we look for is reviews. We look for reviews maybe of a restaurant or reviews, of a hotel, different things like that that kind of tell us, how is the management of that operation. The other thing that we do is we talk to our agents about it. We partner with our agents. We want to see them grow their business, and we want to help them do that. So what is their relationship with the client? A lot of times, they're telling us, hey, this is a good friend of mine. Well, I don't want the insured to have a bad experience with myself if they're a good friend with the agent. So I want to understand what's that relationship. Are there any pain points that the insured's experiencing currently? Was there a loss that wasn't covered by the previous carrier, and they're upset about that, and that's why they have a new agent, and so therefore, can I provide some type of coverage so that that loss is covered the next time? So essentially, what do insurance companies want to see when I'm looking at your business? Things that really stand out to me to say, hey, this is a good business. I want to essentially take the risk and write this account. It's the pride of ownership. So I said we go out to Google the street maps and we'll kind of get a feel for it if we can. I want to see that you're maintaining your business, that you're putting money back into it. Housekeeping on the outside of the building. Do you have a bunch of pallets back next to the building? Or maintenance of your equipment. That's a big piece. Are they maintaining their equipment regularly? For instance, if we had a grocery store, they have a lot of coolers and freezers in their store. Do they have those on a regular maintenance program? And some of those items, that's actually, going to prevent us from potentially having a loss. The other thing that we look for is proactive risk management. So, again, losses. Are they trying to keep that loss from happening again? Do they have protective devices? And what I mean by that is, do they have a sprinkler system? Do they have a central station, burglar alarm or central station fire alarm? Do they have, cameras on the property? Do they have equipment safeguards? One of the things that people don't think about sometimes is, if they have a manufacturing operation, maybe they removed a safeguard so that, it could speed up the production line. Well, we wouldn't want to see something like that because somebody could get hurt with that. So it's about, they leave the safeguards in. Do they add additional, safeguarding for their employees, for instance, by providing equipment? Do they provide goggles for their employees? The other thing that we look at is effective hiring practices. So we want to make sure, do they drug test, before hiring somebody? If there's a loss, perhaps an auto loss, do they drug test after the auto loss to make sure that that person wasn't impaired? We look at the MVRs. Is the agent pulling the MVRs and helping the insured to, decide, hey, is this an acceptable driver? Are their practices going to hurt me? If essentially that could determine if the risk is ineligible. The other thing is low turnover. So if employees are happy and things are going well, then that's good because, you're going to have, high employee retention. We also look at record keeping to make sure, are they keeping track from like a contractor perspective of their job? Do they know what job they did 5 years ago? Do they keep employment records? Do they keep records of their fleet maintenance? If something fails on their vehicle, Do we go back and we look at the, the garage that, sticks to this vehicle the last time and maybe the brakes failed? Do we go back? Did they adjust the brakes? You know what I mean? It's about understanding who did what. Also, appropriate risk transfer. A lot of times we get into that with contractors and understanding, hey, if I'm insuring someone that also, they're a contractor and they have subcontractors that do work on their behalf, do they make sure that they are getting certificates of insurance that prove that that subcontractor had insurance? Because if that subcontractor doesn't have insurance, our insured ends up paying the loss. And I don't think that they're intending to pick up the risk of their subcontractor. We also look for financial stability. Again, it's about, are they making money? Do they have the capital to put money back into the business and to properly maintain it from it? And then we look for experience in the field. We want people that know what they're doing and have done this for a while so that we don't essentially end up having a claim because maybe the guy is doing plumbing work and he's never done plumbing work before. Well, is that the best risk for us to take? But if he's been in the field for the last 30 years, then yeah, he's probably someone that I want to insure because he knows what he's doing. He's doing it for a long time. The other thing that we were asked on this is what insurance companies don't want to see when evaluating businesses. So the website exaggeration of capabilities is probably my favorite. It's really funny because a lot of times we'll go out to a website and we'll see, all these wonderful things that the insured says they can do. And then when you talk to the agent, you say, hey, what's going on? Their website says they're going to do all these extra things, but, you're telling me something totally different on this application. And then the agent has to go back and they're like, no, they don't do that anymore, or they used to do that, or they did it one time. And so we don't like to see an exaggeration of capabilities. While it might be good for your business, it's not good for your insurance. So for instance, if you put a plane or you showed pictures of work that you did at an airport, a lot of carriers are probably going to say, nope, not interested. Because a lot of carriers don't want anything to do with an airport or airplane. So be careful with that about what you're putting on your website. The other thing is a lack of prior insurance. When we talk about good management practices, it's people that recognize, hey, I need to have insurance. They're betting that they're going to have a loss, and the insurance carrier is betting that they're not. So the insurance is important because it's an indicator that you want to protect your assets. You want to protect your business. Another thing that we look at is late reporting of claims. So this is interesting because it might not seem like a big deal to you at the time that maybe you got notice that your product didn't work properly, or that there's a claim, or maybe there was an auto accident and you didn't report it right away. That's important for us because the moment that we know about these claims, then we're going to start and do work inside. And our claims folks are going to go ahead and they're going to look into the risk and try to understand and get in front of this. And really the reason of getting in front of it is to make sure, hey, I want to prevent this claim from getting too large. And if there's something that we can do, to stop this or prevent this claim from growing or spreading, we want to do that as quickly as possible. The other thing is if somebody's moving carriers or agents often, that's kind of a red flag for us because we're trying to understand, why do they want to move carriers so often? Are they trying to, stay away from something that's catching up with them? It's kind of a red flag that it's like, why is this happening? It also shows no loyalty. So if you end up having a claim and, we handle the claim properly and we do a good job, we expect that you're going to stay with us and show loyalty. The other thing that stands out is poor payment history. So again, it goes back to that financial stability. So we want to make sure that you're able to, pay your insurance policy on time, because that tells us, okay, you're financially stable, you're putting money back into the business, you recognize that this is an important part of your business. The last thing is folks that aren't receptive to working with insurance carriers, and that's really like on a lot of different areas. So that's, claims, non-compliant audits, or risk control. And so really just making sure that you recognize we're trying to work with you and help you.
Great, awesome, Tessa. So at this point, we're going to go over or into a little bit of coverage-specific items within the insurance policy. We're going to go into property, general liability, some hot topics in terms of what we're seeing in the industry. At this point, I want to talk about property insurance. The famous last words of any insured that we talk with is, "It won't happen to me." But unfortunately, I'm here to tell you it does. You know, it's not a matter of if, it's a matter of when and how bad it's going to be. Just for a little information, our agency here in Northern Ohio, we've paid out over $22 million in property claims over the last 5 years. So to say that it's not going to happen to you, it will. I'm working on a manufacturing facility that had a $2.3 million loss last year. Unfortunately, they took our advice and got adequate insurance, but luckily we did their insurance. So we always joke at our office is that the first 5 pages of every insurance policy states, "Hey, no problem, you've got coverage," but then that next inch and a half of coverage or paper is saying "except when." So there's a few hidden tripwires in any policy, and majority of policies. So I want to highlight a couple of them. Percentage of deductible. So on larger accounts, insurance carriers are now using a 1 or a 2% deductible off of your property coverage for your deductible. So it's not a straight $1,000 or $2,500 deductible. So if you have $1 million building, you have a 1 or a 2% deductible, you're going to have a $10,000 or $20,000 nut you're going to have to pay before the insurance company has to pay out anything. Next is someone else's stuff in your care, custody, and control inside your building. If you have a loss, does your current policy have drop downs to cover other people's goods in your control? Whether you're a stamping operation or a machine shop with people's or other your vendors or your customers dies in your facility. Even if you're a auto garage and you've got employees' tools, is that included in your policy? The transit exposure. So if you're transporting goods from your facility to one of your customers, the question we always ask is, who's responsible for that? And we always get the response is, well, I assume the other person is, or I don't know. And we all know what happens when you assume things. So making sure your coverage or also your contracts that you have in place with your vendors is pretty clear, because you don't want gray or black. You know, you want to be black and white, not gray at the time of a loss. Specifically flood, it's excluded unless it's included in your policy. Equipment breakdown and co-insurance are big items in any insurance policy that's not talked about enough. Equipment breakdown is going to be your sudden and accidental breakdown of equipment, whether it's a refrigerator unit if you're a restaurant or a food distributor, whether it's a HVAC system or even a CNC machine or a large stamping press. There is coverage under the equipment breakdown. Again, I'm not going to get into specifics with these coverages because I think just for time's sakes, we want to make sure this thing moves along. But these are all questions that you need to discuss with your broker and make sure they're specifically designed in your policy. Co-insurance is a huge hot button. Ask your broker about it. Did over should times your loss. Go through that exercise with your insurance broker. High level general liability. You've got premises, products completed operations, and personal injury and advertising. So that's, you're getting sued or you're in you have to pay out for negligence of your product, of giving bodily injury or property damage to other people. And also the personal injury and advertising is libel, slander, defamation of character. If somebody is suing you for any of those things, a normal general liability policy will provide defense and coverage in that type of lawsuit. We always get the question, how much insurance should I have? And that's a question that I'm never going to answer with a straight answer. I'm going to say, well, how much are you willing to pay? The question is, or the thing is it it's always easy to tell somebody how much the insurance they should have after a loss, but I always encourage people to look at an umbrella policy or an excess liability policy, because the cost of that insurance is relatively peanuts compared to anything else that you're going to have out there, specifically with paying a lawyer around $400 to $500 an hour to defend yourself out of a lawsuit. Lastly is, how are these general liability policies rated? Most policies are going to be under sales, payroll, or square footage if you're in a building. Most minimum premiums are around that $500 range. And as Tessa alluded to earlier, is look out for the audits. When you're putting your policy together with your insurance advisor, you want to have accurate numbers going into that policy period for the next 12 months, whether it's payroll or sales, because you don't want the insurance company to audit you and then have to pay the insurance company back money. Conversely, though, if you guessed higher on your insurance and you were lower, you can get money back from the insurance company. It's kind of, think about it like as taxes as well. Just like the property, general liability has holes in it and exclusions. I'm not going to get into these, but pollution and professional liability are specifically excluded. Product recall. Think about a distributor or a food manufacturer. If they distribute their food out to a bunch of grocery stores and they find out there's E. coli within that shipment, they have to pull all products. That is specifically excluded on all general liability policies. As Tessa was talking about earlier, you want to make sure the insurance company knows what you do and how you're doing it. You don't want to be classified as a interior contractor and you're actually a roofing contractor. At the time of a loss, we don't want to have any insurance company have the out of pulling the e-brake and denying a claim for misrepresentation. That's not a good day for you. It's not a good day for your insurance broker or the insurance company. The only people that win in that situation are the lawyers, to be honest. But last thing is the certificates of insurance, making sure there's risk transfer, as Tessa was alluding to earlier, and subcontractors. Essentially, if you don't have a certificate of insurance specifically naming you as an additional insured, they're going to be treated as employees of you. So I know there's concerns or there's conversations about taxes and 1099 versus employees. I'm telling you, just on the insurance side, make sure you treat them as your own if they don't have their own insurance. There's classifications for subcontracting and class codes as well on your general liability policy. Lastly, all general liability policies or standard policies are going to have the U.S. territories, Canada, and Puerto Rico. If you're operating outside of the United States or any of those territories, you're going to have to look at a worldwide products liability policy, or lawsuits will have to be brought up here in the United States. So again, I know that we're running a little short on time, so I'm going to let Tessa talk about commercial auto.
Thanks, Rob. So commercial auto, biggest thing is most people expect that they're going to have a fender bender, but you don't expect that you're going to have a chain reaction accident where there's 5 or 6 cars involved. So the biggest thing that you need to know is, do I have limits that are acceptable? If I have a large loss, will my business be protected because my limits are high enough? The next thing is, there's some optional coverages that are pretty relatively inexpensive that I would recommend, and I think your agent would recommend. So non-owned auto, that's really like for your employees if they're driving their car on behalf of your business. The other one is going to be hired auto. And I know it's kind of confusing, but hired auto is actually for rental cars. It sounds like hired car would be for your employees, but actually it's for rental cars. The other piece is towing and rental reimbursement expense. So if you have a vehicle and you use it to deliver your product and it gets in an accident and it's totaled, you're going to have to go out and rent another vehicle. So this is one of those times where you'd want to have that rental reimbursement so that you can go out and rent another truck to deliver your goods. Some things that are considered whenever we're looking at a commercial auto policy is the size. It's the size of the vehicle. The larger the vehicle, the more damage. The fleet, how many vehicles do you own? Are they piled in your business? Do you have a fleet maintenance for those vehicles? The other piece I already mentioned is motor vehicle report. Are you reviewing your driver, your employees MVRs with your agent? They essentially could cost you. If you have a lot of drivers that have poor driving records, that could cost you more on your insurance, or it could cause you to become ineligible and maybe they don't want to write your policy. The other thing is the radius of operation. So the further you travel, that's more exposure for the carrier, and so therefore you're probably going to see higher rates with that.
Great. So the next couple of slides are going to be specific coverages that are excluded, but you can include them into your policy. So professional liability. Each one of these slides we can talk about for 30 minutes, but we all know doctors and lawyers, CPAs, all have professional liability. But the litigious environment that we're currently living in, all industries specifically have an exposure within professional liability, errors and omissions. Carriers are now coming out with E&O policies for contractors, manufacturers, auto garages. But the big things that you need to talk about is what is the retro date? So how far back will the insurance company cover you? A lot of times, if you've never had a professional or E&O policy, it will be at the inception of the new policy. Ask your broker if it's a claims made or occurrence policy. That's going to determine when the insurance company is willing to defend you in that lawsuit. And lastly, is there a tail coverage, meaning at the end of your policy period, is it going to extend into the future? Again, be careful with professional liability. You want to be working with somebody that has a deep and wide knowledge within professional. The next thing is the hot button, the new frontier of claims. It's cyber liability. I'm sure it's in all of your industry trade magazines, and you hear about it all the time. But if the government, if Equifax, Target, Home Depot, if they all are susceptible and have been hacked, you better believe that every single person on this webinar is low-hanging fruit for the hackers. I've done a couple different presentations about cyber liability, and it is just fascinating how these hackers are getting into our systems. Unfortunately, the industry and how it's always going to be, we're going to be reactive and not we can try to be proactive as much as possible, but the hackers are always 1, 2, 3 steps ahead of us. So in the event of when you get hacked, it's not a matter of if, you want to make sure you have the proper coverage in place. I don't care if you're an ice cream shop or a CPA, everybody has an exposure within cyber. One of the most fascinating things is the social engineering portion of cyber hacks. It involves email or other communication that invokes urgency, fear, or similar emotions in the victim, leading the victim to promptly reveal sensitive information, click a malicious link, or open a malicious file. Training your employees is a big thing. Making sure they know what to look for in a fraudulent email or a phishing email. Within this coverage, you have first and third party coverage. It would have to be specifically tailored to your specific needs as a company. It's not a one size fits all type of policy. Lastly, is the employment practices liability. We are seeing more employment practices liability claims than we ever have in the past. Discrimination, wrongful termination, harassment, failure to hire, failure to promote, employees or former employees, or even customers can sue you even if they don't have ground to stand on. The problem is that you have to defend yourself out of these lawsuits, and that gets very costly. With any insurance product, it's going to be, do you want to transfer that risk to the insurance company to handle that, or do you want to self-insure that? I would suggest that you have at least a baseline limit of liability for your employment practices, because unfortunately, you know, the world's getting more litigious, it's not getting less, and you might as well have something. And Tessa?
Thanks, Rob. So business income, this is such an important coverage for anyone, really. So what this covers is if you have a fire or you're out of business, you want to continue to keep your business going. So if you learn anything from this slide, it's keep good record, because in order to have that claim paid, you have to be able to show that you actually had that profit coming in during that time. So what it does is it'll pay you for the income that you would have earned or incurred during that time that you were out of business. It pays for to help you with normal operating expenses. So, you know, just because you have a fire potentially, you still have to pay for the rent of your building, or you have to pay the mortgage on your building, or you have to pay, you know, the utilities, whatever. It also helps with expenses to pay your key employees. It helps with you moving to a temporary location. You know, maybe you move to a different location and the rent is higher at that location. That's where it pays for extra expenses incurred to help you keep going. The big thing about business income is that it's to help you get your business going again, because essentially the longer you to get that income coming in, the more the claim is. So they want to help you do that. You know, if you have to go out and buy a tarp to put over your roof, they'll pay for that because they want you to get up and running again. The other thing that they'll pay for is expediting expenses. So let's say you have a piece of machinery that went down. In order to get it, you know, your business up and running again, you have to pay for express freight to have it shipped. They'll pay that under expediting expenses. So really, they're going to help you get your business going again, because most businesses that have a large loss, a lot of them will end up going out of business because they aren't prepared with business income coverage. They either don't have it or they don't have enough. So again, what I tell you is keep good record so that you can show I did have this much income coming in and these are my expenses every month.
Great. So what's next? You know, just we threw a lot of quick high-level insurance information at you, and at this point you have to ask yourself, where do you stand currently on the cost versus coverage scale? You don't want to be, again, I'm cognizant, insurance is an expense, I understand that, but you also don't want to be out of business after a claim. You have to ask yourself, I would suggest to have a meeting with your insurance broker, ask the tough questions, ask the hypothetical questions. And these are the things you should be expecting from your agent: involvement, responsiveness, risk management, guidance, and a trusted advisor, not a salesperson. There's so much leverage, or there's so much opportunity out there that normal businesses don't realize that it's at their fingertips. Specifically with Grange, we have the risk management piece. We can bring out their people that in the event of a claim, you can use that service within your policy. Lastly, employment practices liability. Our office uses the attorneys at the insurance companies for hiring and firing best practices. So we don't want to get into a lawsuit. We leverage our insurance policy to guide us in that. And lastly, Tess and I would thoroughly like to thank you guys for listening in on the webinar. I know insurance, as I said earlier, is not the most fun thing to listen to, but we really hope that it was worth the 45 minutes of listening to two insurance nerds go on and on. But we hope that you take a couple nuggets back and you can improve your operations and how you do business. So, Marissa, are there any questions at all?
I do not have any questions just yet, but we can allow for about a minute or so for questions to come in. And while we're waiting for those questions to come in, I'll just finish up here. I wanted to thank you, Rob, and Tessa, so much for sharing your knowledge with our members today. And thanks to everyone for attending this webinar. Your feedback is really important to us, so we ask that you complete a brief survey, which will be sent to you shortly. And if you're looking for further resources on business insurance, you're welcome to visit our website, which is cose.org. And also, if you enjoyed today's webinar, be sure to join us on April 11th for The Rise of the Bot, What You Need to Know by Ryan Gialmas of Robots and Pencils. And I'm still not seeing any questions in, so if I receive any questions from anybody after this session, I'll be sure to relay those to the presenters. So that'll conclude our session for now. Thank you again, everybody, and I hope you all have a great day.
Thank you. Bye-bye.
Bye-bye.
Thanks.